Hi, good week to all. This is Kelvin here. Welcome to this week's latest edition of our weekly technical outlook. The usual major stock indices that I will cover for the week of 9th of August to 13th of August, which is the SPX 500, the Nasdaq 100, especially the Hong Kong 50, where we start to see the last 2 weeks ago there was a drastic push down due to this ongoing regulatory clampdown. So where will it go next? And Japan 225 and as well as the German 30 index. So now let's take a look at the disclaimer slides first. Okay, so before we start the technical analysis on the various major stock indices, pardon me, let's take a look at the raw momentum analysis of the major, we call it stock indices across the globe, yes, ranging from US, Europe, and all the way to Asia. So this was last week performance. Okay, so there I break it down to weekly performance and its prior 4 week average, and as well as the difference between last week performance and its prior 4 week average. So basically, this column is something a bit like momentum. Okay, it's very similar with the rate of change. Yeah. So let's take a look at last week performance on the four major US indices: S&P 500, the Nasdaq 100, the Dow Jones Industrial Average, which is heavily weighted towards the cyclicals, and as well as the Russell 2000, which is heavily weighted to the small cap stocks. All right. So you start to see a bit of outperformance relatively in the small cap space, which in the last 3 or 4 weeks you actually notice them that they actually underperform the broader major US stock market. So they actually outperformed last week, very similar with the Nasdaq 100, which is comprises of the major US big tech companies, ranging from Microsoft, Facebook, Amazon, and whatsoever. So this particular tech tech play has been ongoing. I would say outperformance of high quality tech has been ongoing since the start of Q3. So that is our Q3 team play, if we could recall, in our Q3 global market outlooks, which I shared with you at the start of July. All right. So prior, then you take a look at the prior 4 week average. Okay, then what you could see over here is the one that has the highest momentum taking the between the difference of last week and the prior 4 week average lies on the Russell 2000 index. All right. So yeah, what we could see over here, that's the major observation that I share with you. So what we could see is yes, overall it's still positive, given that small cap stocks now is actually taking the lead in terms of momentum, okay, which are more sensitive towards growth. Then Hang Seng Index as well as Hang Seng Tech Index, not share with you, is because due to its very strong sell-off that was seen 2 weeks ago, okay, negative 5%, negative 7%, is due to this never ending, I would say, Chinese or China regulatory measures. Initially, it was started as a clamp down on Alibaba due to its rampant, I would say, rampant fintech or financial tech arm, because due to this rampant consumer lending or micro lending, that after that it start to lead into more anti-monopolistic practices, and now the measures or regulatory things seems to getting more nationalistic. One is due to the risk of the big data that they have. They may fall into adversaries that the China authority do not want, and right now the clampdown seems to spread on to the social cultural norm of the Chinese society as a whole. One example is the clampdown on the edutech firm, which is the online China education firm. All of that has been seen massive sell-off due to the fact that they may be forced to become a private to become a kind of a non-profit organization, because the regulatory claim that having too much of such firm actually has social ills. All right. Okay. So what you could see over here is that due to the fact that social ills, because um, it could be a little higher stressful society, population growth in China might slow down because all this kind of a negative snowballing effect where couples may not want to have more children. So now it seems to me that the Chinese regulator has now kind of forgo growth, but paying more emphasis on the social aspect of their policy. So this is something that we need to take note of in the coming months ahead for the rest of this year. Okay. So, but what's thing interesting about over here is that we may start to see a kind of a at least a technical bounce, not a kind of very V-shaped recovery for the Hang Seng Index, the Hang Seng Tech Index. Why? Because if you look at the difference, among the major peers, the rest of them, they are the highest last week. Okay, negative, positive 3%, positive 2.4%. Then also definitely followed by the Nikkei 225 as well. So later I'll share the chart of Nikkei 225. In fact, it's consolidating in a long-term uptrend, and the 3 months plus, it seems to me more like a bullish wedge a bullish flat formation. And last week it starts to actually rise from a key support zone, and the difference of last week performance and its prior 4-week average is at 3.3%, which is pretty positive. So what we could see is that momentum has started to come into previous underperformance. So what we could see over here is that we could actually advocate a potential tactical rebound scenario potentially in this beaten down index, which is the Hanse Index, the Hanse Tech Index, and the K225. German DAX index still kind of sideways formation, trading pretty much a tight range above their all-time high level. Uh, Difference wise is 1.57%, which is I would say that in terms of momentum is relatively healthy as well. Okay, so now let's quickly take a look at the weekly performance on the 11 S&P sectors. If I break down the sectors, so what we could see is a pretty mixed bag. Over here, we have one of the cyclicals outperforming last week at 3.6%. Then followed by the tech sector, which is 0.93%. Then defensive, which is 2.28%. So not much of a clear cut of a stock, what we call very kind of a clear obvious cyclical underperformance. Yes, even though we start to see the rest of the cyclical still underperforming at the bottom of the table, which is energy plus 0.32, then industrial plus 1 plus 0.17, and materials plus 0.16%. So we see majority of the cyclicals are still at the bottom of the table. So this is still ongoing with the yield curve, the treasury yield curve. The 10-year minus the 2-year are still in a kind of a medium-term downtrend phase. All right. So that I think a bit of a downside pressure on the cyclicals. Okay, now what we have in terms of economic data releases for this week is pretty light. So what I want to highlight is inflationary data. US inflationary data will be the CPI, not the PCE, which is the Fed tend to monitor more closely, but definitely CPI is an important inflationary metric as well to watch on Wednesday at 8:30 p.m. Singapore time. Okay, so if you recall, last Friday we have a very strong NFP print in terms of the headline numbers itself. So if we start to see a very strong inflationary rate data for US for the month of July, it may start to see Jackson Hole symposium, which is starting at August 26th, to become getting more and more of a live event. Okay, what does it? That's the live event because that particular event, Fed Chair Powell may actually give a more concrete signal on the start date of tempering. And maybe if you don't give a concrete start date of tempering, he may start to actually announce what are the key metrics for the Fed to watch to allow them to kickstart tempering. So right now, based on market consensus, the start of the tempering, QE tempering, seems to be getting more and more louder in around October to November this year after the September Fed FOMC meeting. All right. Then you have close up the week. You have US PPI data. We call it factory gate inflation, which is important as well. 8:30 Thursday. And to run off will be the consumer sentiment index data for US on 10 p.m. on Friday. So what are the key company announcement or earnings to watch out for this week? So still recall that we are still in the earnings season for US as well as Singapore. So we have a couple of US ADR, that means China stock listed in US will be Douyu. Douyu is actually related to the online streaming arena, which comprises of e-gaming as well. All right. So then most importantly, you have this New Oriental Education and Technology, the company that got hit in the recent we call it edutech clampdown as imposed by the Chinese authority. Then you have Coinbase Global, which is on Tuesday after the market close. So then NIO, one of the major EV Chinese player, listed in US Wednesday after the market close. Then for Singapore, we have a couple of you have Wilmar out on Wednesday, City Development Thursday before the market close. Then you have SD Engineering on Thursday, Genting on Thursday, UL on Thursday, and CapitaLand on Friday, followed by Comfort Delgro Friday, and one of the recent high flying firm, it's a tech kind of a growth tech stock, another film, which is out on Friday after the market close. So China big tech stock, and I'll keep a close watch on will be Baidu. So if you look at my chart of the week for this week, which I highlighted in my Twitter account, my Twitter page over here, is that Baidu right now seems to be a very potential for at least a medium-term multi-week up move potentially, because it really tested a key long-term support level with some positive technical elements. So to take a look at my chart of the week for Baidu. So I actually explained in greater detail why I think that we may see a multi-week up move from here. All right, then now good. So now let's take a look at the charts, okay, of the major stock indices that I want to highlight for your. Okay, so let us start off with the risk proxy first, which is the Semiconductor Index, or the SOX Semiconductor ETFs. Okay, that comprises of the major semiconductor stocks listed in the US stock exchange. So what we could see is managed to clear above our first resistance, which I highlighted weeks ago, 458, clear bullish breakout. No signs of exhaustion as seen on the daily RSI, which is a measure of momentum. Higher high, higher low, still below the extreme overbought level, which was at this level at 82%. So we still see potentially upside momentum is not overstretched. So high potentially it may start to eye the next higher resistance level at 495, with our key medium-term support for this week at 4236. Okay, so as long as 423.60 holds, which is the lower boundary of this ascending channel from in place since 28th of October 2020 low, and as well as the 50-day moving average that has kept previous dip since 21st of June. All right, test one time, two time, three time, and bounce. Okay, so this is definitely a key medium-term support to watch to maintain this ongoing medium-term uptrend towards the next potential resistance at 495. So overall, we're still seeing a risk-on environment. Okay, so definitely given the risk-on environment, I do not want to be so bearish to actually play a contrarian move on the major stock indices, because it makes no sense. All right, so to actually go against the ongoing current risk on trend, at least in the medium term. Yeah, we'll talk about from a multi-week perspective. So let's quickly go on to the SPX 500, showing you all the higher time frame element with the daily chart. So what we could see over here is that since the bullish breakout of this expanding wedge resistance that has been taken out on September or December last year, it's been tracing in a period of higher high and higher low, always holding above the 50-day moving average, despite several instances there was a slight test below it and before it bounced back up again. So what we could see now is that my first resistance we have is 4450, so followed by 4630. The longer, that's my long-term Q3 target, my Q3 upside target at 4630. So potentially everything still remains intact. No signs of exhaustion yet. The 50-day moving average now is acting as support at around 4300 figure, which is very close to 4290. That was my key medium-term support that I have for last week. Okay, so I do not want to tighten so much, because provided that because it hasn't break above the 450/60 first resistance level yet. So still looking to be bullish on dips, holding above 4290 key medium term pivotal support. Still looking for a potential push up to surpass 450/60 before eyeing the next potential resistance at 450 next. All right. So overall, this trend is still bullish. Medium-term trend is still bullish as long as 4290 holds for the SPX 500. Now moving on to the more outperformer, the slightly more outperformer among the major UN indices in Q3 will be your Nasdaq 100. So Nasdaq 100 still holding above the 50-day moving average, which is now at 14,500. Okay, so pretty much unchanged. Last week movement was kind of a sideways, but if you realize that the lows are getting higher low. So all in all, right, we could see as bullish momentum is building up potentially on the Nasdaq 100. Okay, given the price action. So no change for the strategy. So the strategy is we still below the first resistance, which we predefined last week at 15,240/300. So because this resistance is not being taken out yet, so I do not want to shift my medium-term pivotal support to too tight. So still at 14,760. So as long as 14,760 holds, I'm still expecting another leg of bullish impulsive up move, potentially to test the next resistance at 15,600/15,630 on the Nasdaq 100. Okay, now moving on to the Hong Kong 50. So why I'm bullish on the Hong Kong 50 is this. Take a look at from the initial push down, we are now traveled to 20%, which is the kind of define it as a bear market. Technically, yeah, technically. But even though it's being defined technically as a bear market, it kind of induce fear into market. So when we start to see fear in the market, right, this is where from a contrarian opinion perspective, which is one of the pillars of technical analysis, one of the tools that we use in technical analysis to actually detect a potential bullish reversal, at least in the medium term, not in the very, very long term, where I'm expecting a V-shaped recovery to take about for Q3 to actually do all-time high to 31,890, but at least 1 to 3 months potential tactical rebound play. Why? Because it stops right as exactly at our key long-term pivotal support that are highlighted in our Q3 outlook at the start of July, which is 25,760. So what's 25,760 is the pullback resistance the former pullback resistance of a formula circular descending trend line that kept previous up move since this all-time high in Jan 2018, and now it turns to the pullback support, and this pullback support also confluence with the major ascending channel that is still in play, acting as a support since March 2020 low. And you look at how the candle behave. All right, form a bullish harami. Because if I combine these two candles together, right now it's a positive follow through so far at the start of this week. Okay, at the start. Okay, pardon me. At the start of for the month of July. Okay, this is the weekly candle. Yeah, this is the weekly candle. So for the month for the first week of this week. Okay, pardon me, for the first week of 9th of August. Okay, not month 9th of August. So what I could see is that a bullish harami with a positive follow through so far. All right. So that being said, right? So what I have for the strategy for this week, it still remains unchanged. 25760 will be my pivotal support, which is the long-term pivotal support. So I'm still looking for this push up to actually test the first resistance at 27,030. A break above it should take us up to 8,160, which is the swing high of 14th of July that actually preceded before this last push down and also correspond to the upper boundary of this descending range resistance or descending channel resistance that is in place since 18th of Feb 2021 high. All right, so these are the key levels to watch. So still having a bullish bias, but from at least from a multi-week perspective first. All right. So however, if we start to see a daily close below 25,760, then we may see another push down again to retest the previous 27th of July swing low at 24,750. Okay, for this week. Okay, so overall, still maintaining that bullish bias from a multi-week perspective on the Hong Kong 50 index, where we start to see a potential recovery, at least in the medium term, on the Hong Kong 50 index after that bloodshed that we see in the last 2 weeks or so. Okay, now moving on to the other Asia index, which is the Japan 225 or the Nikkei 225. Okay, so let me flash you all the long-term chart. So this is what I mean. Okay, so if you look at it over here, is that since the February high of close to 13,490, 13,500, which is also a 31-year high, it's been congestion in the very lower low, but it managed to help above the 50-week moving average and as well as the long-term pivotal support, right at the long-term pivotal support some more, 26,880. So what we could see over here is, yes, this is the major uptrend. And what we could see now in this major uptrend since the low of March last year is now retracing in a bullish flag formation. All right, so overall, this major uptrend is still pretty much intact in the talk about the long-term perspective, okay, because the 26,880 hasn't broken down. So daily chart, if you look at this is the weekly chart. So if you look at the daily chart over here is this. So it seems to be inside this kind of expanding wedge, whatever kind of formation, but it's below the 200-day moving average. Okay, so last week performance is actually trading sideways. Yes, it's still holding above the key long-term pivotal support, but it just goes sideways, moving nothing. So, but momentum the RSI right has started to shape a bullish divergence. Okay, last week on the week of 9th of July to 20th of July, this lower low in price action, but correspondingly, the RSI is showing a higher low right at the oversold region. So indicating to us that this whole move, right, this whole move over here from the high of 16th of June, the momentum has starts to slow down. All right, the momentum start to slow down, but price action now is still kind of a sideways. So it's actually now have a kind of a leading element. It's either it goes sideways and reverse up, or it start to go sideways for a long time and start to drop again. Okay, but for now for sure that we know that this downside momentum has started to slow down. Okay, from this last swing move down, which is from the 15th of June high swing move down. Okay, the downside momentum has started to slow. So now for that strategy, right, last week we turned neutral because of this mixed element, so still no change. You look at the way the price action move at the start at this week at today is actually a push up, but didn't break above the upper neutrality level and starts to come back down again. Okay, so what we could have is neutral between these two range of 28,250 and the long-term key pivotal support at 26,880. So still expecting a kind of a churning between these two sideways range, except if we start to see a 4-hour close above 28,250, that will actually validate a push up towards 28,860, then followed by this range top here at 29,600 on the Nikkei 225 or the Japan 225 index. So for now, elements are still rather mixed, so still expecting a sideways stance on the Japan 225 between 28250 and 26880, which is the long-term pivotal support. All right, highlighted on the weekly chart. So now moving on to the European benchmark index, the key European benchmark index would be the German 30. So we could see German 30 ever since the 14th of June swing high, which is correspond to the last or the current all-time high seen in 12th of July. It's been trading in a very tight sideways manner. All right, so still holding above the support, which is at 15,200. Right now it's slightly up, it's really managed to move after kind of a whipsaw over here around the 50-day moving average. Late last week or mid of last week, it started to trade above it. So the 50-day moving average now is at around 15,000 500 thereabout. Okay, 15,500, 15,600. Okay, so what we could see over here is that the strategy that I have for last week still remains unchanged. It still didn't break above the 15,018 range resistance. Okay, that has kept previous swing high. So what I want is I don't want to tighten the key medium term pivot support so high towards the 15,600, 15,500 50-day moving average. But what if it suddenly goes whipsaw again? So I rather keep it a bit of breathing space, still looking bullish on dips, using 15,200 as a key medium pivotal support, which is also the lower boundary of this short-term ascending channel that is in place since 1st Feb 2021 low. So unless it managed to have a clear breakout above 15,810, that I could actually tighten it to 15,500 slash 15,600, which is the 50-day moving average. So for now, I still remains the same, 15,200, looking for a potential push up if the 15,810 breaks towards the first resistance zone at 16,070, then followed by the next resistance at 16,530 slash 16,685. Right, so that pretty much sum up to my weekly technical outlook on the major stock indices across the globe. So overall, from US to Hong Kong to Germany, we still have a maintain that bullish bias. Except for Japan, we still expect it to be a bit of sideways movement above the key long-term pivotal support. All right, at 16,680. So what we could have over here is that there's still no clear signs of indicating the start of a multi-week corrective down move on the major stock indices at this juncture. So with that, have a great trading week ahead, and I see you all next in my next video.